What a lot of people do is they say, okay, you want to buy this property. Let's assume that it's on sale for $150,000. What most people say is, well, number one, I don't have $150,000. And so this is where people say, okay, you can go buy it with debt. You need to put down $30,000 to go and buy this property. And then a lot of people will say, I don't have $30,000. And then they will tell you, don't worry, there are other forms of creative financing where you can use 100% debt. That way you can buy these properties with 0% down or only $1,000 or $2,000. And then you start getting into these very risky and highly leveraged games where you have no skin in the game, you have no idea what you're doing, you have no experience, and now you start going on buying these properties. And I'm going to be completely honest with you. Those have been the best deals ever. Not for you. For me, some of the best deals that I have purchased were from people that have purchased properties with way too much debt, with way little education to know what they're doing. And then the banks force them to sell their properties at a huge discount to somebody who has more cash like me. And some of the best deals that I purchased were from people that have been foreclosed on by multiple banks following these extremely highly leveraged deals. So, if you want to invest in real estate and you want to own and operate the property yourself, you got to have some cash, period. If you're going to do it with 0% debt, understand it is so risky. Have some people done it successfully? Yes, I'm sure they have, but it is so much more risky. You got to have some skin in the game if you want to be able to do this properly, which means if you want to buy this property, you better have at least 30% to use as the down payment and some extra cash to protect you, because as soon as you buy this property, there will probably be some sort of repairs. Or you can buy the property cash as well, depending on what the property is, and I know that can be very excessive. Just understand that if you don't have any skin in the game, you're taking on all the risk. But let me talk about how real estate investing works now that I kind of put aside this disclaimer. The way real estate investing works is you buy this property, it could be a home, it could be an apartment complex, it could be a commercial building, it could be an office building, it could be a retail building, it could be any type of property. But the reason why you're buying it is not for you to live in yourself and to use yourself. You're buying it so somebody else can live there or use your property and pay you rent. So I go out and buy this property for $150,000, and then I have this nice couple, this guy right here who has a nice mustache. In Punjabi, my native language, we call it a much, or his wife, I should say, who has a braid. In my native language, Punjabi, we call this a gut. So this nice couple live in my property. In exchange for them living in my property, they pay me, I don't know, $1,600 a month for living in my property. Now, the goal here is to take this rent and use this to cover all of my expenses, property taxes, insurance, maintenance, management, and have a vacancy factor. I know a lot of people don't talk about this, but you have to factor in vacancy as well, because the reality is when these people move out, there's going to be some time before the next tenant moves in. So you want to have the vacancy factor. So you want to use the rent to cover all of your expenses and your mortgage if you have one, and then put some money in your pocket. And the types of returns you get is going to depend on where you're buying and what you're buying and what types of properties and conditions you're buying as well. For me, my goal is a 7% cash on cash return, which means if I'm buying this $150,000 property, all cash, I put 150 grand out of my bank account to buy this property, I want a 7% return, which would be $10,500 in profit every year for owning this property. That's after paying all my expenses, after paying for the property taxes, the insurance, the maintenance, the management fees, and the vacancy, to have $10,500 in my bank account in profit at the end of the year. Now, I know what you're thinking. There's a couple things that you're probably thinking. Number one, Jaspreet, where in the world am I going to find a property for 150 grand that I can rent out for $1,600 a month? Well, there are parts of the country in the United States that allow for this. You might not be able to find it in Los Angeles. You might not be able to find it in Manhattan. You might not be able to find it in Austin. You might not be able to find it in Miami. But guess what? You can find it in the Midwest. I'm in Detroit. Our office is in downtown Detroit. Michigan is a great state, not just for rental properties. It's a beautiful state, by the way, very underrated. I highly recommend you come check it out. But there are also some great real estate investment properties where you can do these types of deals. I mean, they're not all day long, but you'll find these types of deals. And you can get these types of returns. So now, the question is, what is the benefit of real estate? Well, like we talked about before, you own something that you can see, feel, and touch. You get some tax benefits because if you make $10,000 worth of profit, you also get to tell the IRS, hey, my property's 1 year older, so I don't want to pay taxes on all $10,000. You get a depreciation deduction. You get to write off a piece of the property value against your income, so you don't have to pay taxes on all the income that you generate, and you get the steady cash flow. But it takes more work to get started. You got to be able to manage a team because I can tell you, in the beginning, it is not passive. It took me a few years to get the hang of it. A lot of stress, a lot of mistakes, expensive mistakes, and a lot of screwing up, which if you're not willing to go through that, don't invest in real estate. It is a lot of work. Now, my goal isn't to manage the properties myself. I don't know who my tenants are. My tenants don't know who I am. I have a property management company who handles all the day-to-day stuff, who lease out the properties, who screen the tenants, who make sure that the tenants pay, who take care of the maintenance, who make sure the property bills are paid, who make sure the taxes are paid, who build my financial reports for me. I don't have to do the day-to-day stuff. For me now, and again, it took me a long time to get here. For me now, I'm reviewing the monthly reports, I'm reviewing the quarterly reports, and I'm making sure that the management company is doing their job. So it's overseeing, still requires some more work, but that's my role now as opposed to me handling the day-to-day stuff. I don't recommend you go out and become a manager of the property and you start doing all the leasing and the repairs and all the day-to-day stuff with management because you want to be an investor, not a manager. You can hire a manager. You want to spend your time, focus, and energy being an investor and acquiring more deals. That's how you really build wealth. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.